Well, welcome everybody. This is my Market Insights. It is June the 8th. Market's trying to recover a bit. That's good news. So we got plenty to get to, so let's go ahead and do that. Hope everybody's start of the week is amazing. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. So, what's moving the markets? Market's trying to recover from Friday's market swoon. Let me see if I can get latest and greatest. So, the Dow is pretty flat. It's down 30 points, which is 0.06%. Could change between now and the end of the day. S&P is up nearly 0.6%. The Nasdaq 1.21%. Um, The NASDAQ 100, the triple Qs, up almost 2%. The Russell up almost 1%. And the chip makers are making a recovery. Now, have we recovered all the losses? Not even close. We're about a third of the way there. But, if we had had another day where the markets were falling, that could have been a problem. Iran announced that they will stop military operations against Israel. Okay, that's good news. It's not the first ceasefire that I've heard of. And hopefully this one actually sticks because a number of them have not. But I guess uh, they were going in there doing some real damage and have decided, okay, enough is enough. I still can't figure that whole deal out. SpaceX share go public on Friday. Value of the company 1.75 trillion. The shares will be $135 per share. It's going to be really interesting to see the price action. I mean, I expect it'll get bid up for a period of time. The real question is, will there be that typical IPO pullback that we have seen over the last several years? That would be my expectation. I can't guarantee you that's what's going to happen. Personally, would I like to own some SpaceX? Yeah, not at $135 a share though. That stock was valued or the company valued at 600 billion um, in December. Now it's triple that valuation. What's happened in the last 6 months that would warrant tripling the value of that company? Nothing I can think of. 10-year Treasury pretty steady at 4.552. So we have breached the 4.5 level. Markets get a little growly. Oh, look what happened on Friday. It was heavily growly, not because of this independently. I'm going to kind of share with you how the dominoes fell here in a second. And oil prices are up a bit to almost $92 a barrel. Here's what happened on Friday. New job creation came in at 172,000 for the month. Fantastic. Double the estimate. Why would that cause the market to fall? So the Fed has two mandates: stable pricing and full employment. And they sort of have to decide which of those to focus on. If they're trying to kickstart the economy and help the jobs market, you lower interest rates. Great for stocks. On the other hand, if you're more focused on inflation, you raise interest rates. Bad for stocks. So when that number got announced, the probability of a rate increase in the future went up. The stock market started falling. So when the stock market starts falling, people that are sitting on stocks where they've made big profits, who are worried that the sky is now falling. Because let's face it, the average person doesn't understand these dynamics. All they do is see, uh-oh, stocks are coming down. I knew this would happen. Let's get out. I want to be able to preserve some of these big profits. And then selling begets selling, and next thing you know, the NASDAQ is down 4% on the day, which is huge. But it started with that jobs number. The jobs number then led to higher interest rates, which led to the pullback. Friday's biggest losers have been some of the year's biggest winners: Micron, Teradyne, First Solar, SanDisk, Intel, SMCI, Western Digital, onsemi, Qualcomm, Advanced Micro Devices. All those were down more than 10% on the day. Last week's heat map. So it's not like you have a sea of red here. Tech is red, right? Communications are red because they also are related to tech. Amazon and Tesla related to tech. But healthcare was up, industrials were up, materials were up, financials were up, and consumer staples were up. So it wasn't across the board. This wasn't, hunting with a grenade. This was sniping with a rifle. This is interesting. The Magnificent Seven is now trailing the S&P 500 year to date by a lot. So if you take the Magnificent Seven out of the S&P, then you end up with the S&P 493. That's up 12.65%. The S&P up 10.35%. The Magnificent Seven, 7.34%. That's a big drop off. So do we give up on the Magnificent Seven? No. I start thinking, hey, maybe some of these stocks are on sale. Stocks trading above their 200-day moving average came down a little bit from the previous week, but it's still above 50%. It's at 52.5%. That's bullish. And more than 50% are trading above their 50-day moving averages. I think this is really interesting. So, those of you that have sat through my classes, I've taught you about the PEG ratio. So, that's the PE ratio divided by the earnings growth rate. So, it looks at both PE and earnings growth. So, the lower the PEG ratio, the more value in theory you're getting. I like using this metrics a whole lot. So where do we now see the most value based on the PEG ratio? Um, Micron Technology is at zero point 0.4. That's unbelievably cheap. I think probably the average stock on the S&P is between, if I guess, 2.5. So zero point 0.4, are you kidding? SanDisk zero point 0.4. Broadcom got crushed after a disappointing earnings number. Zero point 0.6. On semi, zero point 0.6. Marvell, zero point 0.6. I'll just go up till we hit 1. AAOI sounded like AAI, AAOI. I pronounce it like a chimpanzee as well. Zero point 0.7. AMD, zero point 0.7. NVIDIA. I still think NVIDIA is undervalued. It is the gateway to all things AI. Zero point 0.8. CRDL, zero point 0.9. Coherent, 1. So those are all of the PEGs under 1. I think hard to go wrong on any of those. Again, I'm not giving you investment advice. So if you're looking for a market to peak, do you know how many times it has peaked for the year in June, going back to 1950? A zero. When do markets typically peak? December and January. December, by far. There's the new jobs number, right? So that's what triggered really the sell-off on Friday. Believe it or not, you would think that would be good news. Rate hikes are on the horizon, so they're predicting that the ECB, the European Central Bank, is going to raise in June this month and again in September. Good news is they're expecting a cut mid 2027. So, do we typically follow their lead? Somewhat. Wage growth, wage pricing has come down a whole lot from 5.5% in 2022. Now we're down to 3.5%. Um, Average hourly earnings growth for the last 6 months is down further, down below 3%. So bad if you're looking for a job, good if you're looking to hire. The demands are less. Market sentiment. So every week there's a survey done from the American Association of Independent Investors and asked over the next 6 months, where do you think stock prices are headed? Last survey that was done June 3rd, 36.3% say higher, 37% say lower, just about a wash. Fear greed index has moved since last week. Last week we were in greed at a score of 56. On Friday, it was fear at 42. We've come back up. We're barely into neutral at 45. I think neutral is appropriate given where things are. All right, the future of interest rates. So, as of right now, there is a 98.2% probability no change in interest rates in June, 85.8% probability no interest rate change in July, 58.8% no change in September. But now we move to October, and there is about a 51.5% chance that we're going to get a rate increase in October. And there is better than a 70% chance that we'll get one in December if we didn't get one in October. I'm betting on December. I say that there's no way, um, given what's going on in the Middle East, that we're going to come to a resolution fast enough to drive oil prices down fast enough for the Fed to feel comfortable with that. Sector performance year to date, S&P is up, let's call it 9%. Energy is the big winner, but that's war driven, so it's an anomaly. Tech, man, that's impressive. Up 19% in less than half the year. So, who's still underwater? Healthcare a little bit, consumer discretionary a little bit. They're down, 1 to 2%. Financials, where I think there's a whole lot of value, is down 5%. Low multiples, low PEGs, decent dividends. You may want to do some shopping there. News of the week. What are we looking at? And what is potentially market moving? Nothing today. On Tuesday, you're going to get the small business optimism number. Is that going to move the market? No, but it's going to be kind of telling. People that run businesses, how do they feel about what's going to happen moving forward? On Wednesday, we get CPI data. So we'll get CPI for the month, core CPI year over year, and kind of the headline CPI. This is a little frightening. We're expecting year over year inflation to be 4.2%. Now, if we take out food and energy, it goes down to a more reasonable 2.9%, still well above the Fed's target of 2%. Thursday, we get weekly jobless claims and we get inflation at the wholesale level. known as PPI, Producer Price Index. And then consumer confidence will come out on Friday from the University of Michigan. All right, let's take a look at the charts. First thing we're going to look at is the S&P 500. So you can see that we had a rounded top going before the big drop. And now that we've got a big drop, we've got to see what potential recovery looks like. So rounded tops. Now, we're getting pretty close, I think, to a support level. So hopefully we hold where we are. Let's take a look at an intraday chart. Kind of see what the trend is. I'm recording this at 12:30 Mountain Time. So, we opened higher, moved lower. Oh, we continue to go higher, went lower. It looks like we've established a base, kind of been moving up from that base. So, everything looks fine on the charts. Let's check in on the VIX, which is the fear index on the S&P 500. So it had a huge spike on Friday, almost hit 22, which is kind of the top of our normal range, which is 25, but it's come back down and now it's at 1854. It's down almost 14% today. So, all right, there you have it. I hope everybody has a fantastic week, and I'll be back with you next week. Until then, be safe, be blessed. Bye for now.